PSI Site Life, Accident and Health Agent Exam. In replacement, an existing insurer must provide policy owners with a policy summary for existing life insurance within how many days of receiving the written communication and replacement. A. 31 days. B. 5 days. C. 60 days. D. 15 days. B. The Commissioner must examine the affairs, transactions, accounts, records, and assets of each domestic insurer at least every A. 3 years. B. 5 years. C. 2 years. D. 1 year. B. Preferred Provider Organizations, PPO. An Preferred Provider Organizations, PPO, is an arrangement under which a selected group of independent hospitals and medical practitioners become preferred providers in a geographic area. Providers perform services to subscribers and charge a discounted fee-for-service negotiated in advance. The contracting agency or organizer of a PPO might be a commercial insurance company, Blue Cross/Blue Shield, local group of hospitals or physicians, an HMO, large employers, or trade unions. PPOs share the concept of cost reduction by healthcare management and differ from HMOs in that PPOs do not have separate physical facilities and not as capable of controlling expenses other than negotiating standard fees for services with its network provider. Exclusive Provider Organization, EPO. An EPO is a type of PPO that requires a subscriber to seek treatment from a limited number of network providers. Grace period. The grace period is the time period provided after the premium due dates before a policy lapses. The grace period in California is 60 days. To protect, subject to statutory limitations, life and health owners and insureds in the event of impairment or insolvency of a member insurer. This is a description of A. Medi-Cal. B. The California Life and Health Insurance Guarantee Association. C. OBRA. D. None of the above. The California Life and Health Insurance Guarantee Association. Ben is a life agent who would like to do business with the Rock Solid Insurance Company, but he doesn't have an appointment to sell their policies. Assuming Rock Solid does not require exclusive representation, can Ben submit an application to them from a prospect? A. No, appointments are always required to be filed prior to submitting applications. B. Yes, and the application need not be approved by the underwriting department. C. Yes, and if the insurer approves the application they must appoint Ben within 14 days. D. All the above are false. C. Disability income insurance offers various riders to supplement benefits from these policies. The Social Security rider helps establish a limit for the amount of income benefits paid to an insured who will receive substantial benefits that may or may not be paid from government programs. Joint life. Joint life, first to die, is a whole life policy that is written to cover 2 or more lives. The death benefit is paid upon the first insured to die and the policy terminates. There are 4 basic classes of life insurance. All of the selections listed below are regarded as ordinary insurance, except A. A life paid up at age 55 policy. B. A 10-year endowment contract. C. A group life insurance policy. D. Term life insurance policy. C. All the following are factors in determining premiums charged for group disability income insurance, except A. The average age of all members of the group. B. The location of the insured. C. How long of a waiting or elimination period the policy reflects. D. How long the benefits will play. B. Disability income rider. Life insurance disability rider in the event of total disability and after the initial waiting period, such as 6 months, premiums are waived and the insured is paid a monthly income. The monthly disability income benefit is typically limited to a percentage of the face value. The benefit paid from the rider does not reduce the death benefits paid out upon death. Separate account, variable, versus general account, life insurance. The separate account is invested in debt or equity securities as offered by the insurance company. Both the cash value in the separate account and the death benefit will fluctuate based on market conditions and performance of the sub-accounts. There is no guaranteed minimum return on the cash value in the separate account, and the policy may lose both cash value and death benefit if there are market losses. The death benefit is recalculated annually. The general account provides a fixed rate of interest, and the cash value in the general account provides for a guaranteed minimum death benefit. A policy owner makes the last premium payment on his $250,000 non-par whole life policy today. The owner is 70 years of age. When will the cash value reach $250,000? A. About 13 years from now. B. The cash value is $250,000 today. C. Never. He didn't pay up to age 100. D. When he reaches the age of 100. D. Health Maintenance Organization, HMO. An health maintenance organization, HMO, is regarded as a managed healthcare system providing a comprehensive array of medical services on a prepaid basis, which means little or no out-of-pocket expenses. Copayment is required for office visits and hospital services. Copayments discourage unnecessary use of medical resources, such as emergency room services for non-emergency care. HMOs are deemed to be both a healthcare financing and servicing mechanism by emphasizing preventive medicine by providing routine medical exams, wellness programs, and diagnostic screenings. Services include usual physician, hospitalization, prescription drugs, laboratory, X-ray, urgent care. All of the following are examples of the dividend options available on a whole life insurance policy, except A. 1-year term option. B. Application to reduce premium. C. Paid-up additions. D. Life income with period certain. D. Custodial care. Non-medical care, non-skilled care, to provide assistance with activities of daily living such as bathing, toileting, eating, dressing, transferring, and continence, may be provided in a nursing home or in one's own home. Providers are not required to undergo medical training. Indemnity contract. An agreement to pay on behalf of another party under specified circumstances. When making a loan on a life insurance policy's cash value, the insurer may deduct from the loan value all of the following except A. Any unpaid balance of the premium for the current policy year. B. Interest on the loan to the end of the current policy year. C. Any existing indebtedness to the insurer not already deducted. D. Future years' premiums that are not yet due. D. Teresa is injured while working at her company's plant. She is taken to a hospital and receives several weeks of care. She has a non-occupational group health plan at work. The hospital will not be paid by the non-occupational policy because A. Non-occupational injuries are specifically excluded in her group health plan. B. This is an on-the-job injury. C. Group plans must have certain riders to cover working in a plant. D. All the above are false. B. Respite care. Provides relief to a primary caregiver and can include a service, such as someone coming to the home while the original caregiver tends to other matters. Most policies will include benefits for temporary institutionalization of the insured during a period of respite. Adult day health care. ALTC coverage designed to provide custodial care and supervision on a day care basis outside the home for individuals not requiring 24-hour confinement in a nursing home net who continue to live at home. Free look. Every policy of individual life insurance and annuities, other than variable contracts, that is used for delivery in California must contain a notice regarding a return of the policy for cancellation of 10 to 30 days after its receipt by the owner. The minimum free look period is 10 days for persons under age 60. Persons who are age 60 or older must be given a 30-day free look period. Non-contributory plan. Employers pay the entire premium and 100% of the eligible employees must be covered. Per capita. This is a method of distribution that will pay to surviving beneficiaries equally if named a beneficiary dies before the insured does. Choose the correct statement about a cost of living rider. The policy owner, A, is only charged a flat fee to have the rider attached. B, could experience a decrease in amount of the policy if the CPI decreases. C. Pays an additional premium for the extra protection the rider provides and will see the face amount of the contract increase according to the increase of the index. D. All the above. C. Jose is covered by an insurance plan that will pay him disability income benefits if he is injured either while working or at home. The type of plan he has is A/N A. Workers' compensation policy. B. Key person policy. C. Non-occupational policy. D. Occupational policy. D. Which of the following is not legal activity in this state? A. Participating in a plan to offer free insurance if a person buys some form of service. B. Disregarding age in the determination of insurance rates. C. Refusing to apply the practice of twisting in sales. D. All the above are legal in the state of California. A. All of the following statements are correct regarding a warranty except A. It is a statement merely made to the best of one's knowledge, and can only be express. B. Should either party violate a warranty, it entitles the other party to cancel the contract. C. Warranties can be made about events in the past, present, or future. D. Warranties made at or during the execution of a policy must be contained in the policy, signed by the insured and attached to the contract. A. A health insurance contract states that if, during the first 30 days after the policy's effective date, an illness occurs, there will be no benefits paid out of the policy. What is this period of time called? A. Probationary period. B. Illness waiver. C. Waiver period. D. Benefit period. B. What is required when an applicant reveals conditions that require more information? A. Physical examination. B. Attending physician's statement. C. Investigative consumer report. D. Agent's report. A. Which of the following is not an acceptable risk to the underwriting department of an insurance company? A. Substandard. B. Preferred. C. Standard. D. All are acceptable risks. D. Assume two people apply for life insurance with exactly the same monthly premiums. One individual buys a whole life policy, and the other, a 10-year renewable term plan. Both are standard risks with no difference in their age or health rating. Select the statement from below which is false. C. The 10-year renewable term contract will have a premium increase every 10 years while the whole life policy premium remains level. D. The whole life policy will pay a higher amount to the beneficiary should the insured die within the first 10 years. D. A hospital confinement indemnity insurance policy pays a daily dollar benefit for each day the insured is confined to a hospital. Waiver of premium. Life insurance disability rider. If the insured becomes totally disabled, the insurer will waive premiums for the duration of the disability or the end of the policy, whichever occurs first. To qualify for the waiver, the insured must be disabled for a waiting period of 3 to 6 months. The policy owner must continue to pay premiums during the waiting period, but once eligible, the waiver is retroactive to the start of the disability and the premiums will be refunded. During the disability, the insured will credit the premiums to the policy and all benefits, such as cash value accumulation and dividend payments, will continue. Which settlement option allows only the death benefit earnings to be paid to the beneficiary? A. Cash option. B. Fixed amount option. C. Interest option. D. Fixed period option. A. All of the following are used in determining life insurance rates, except A. Investment and interest return. B. Insurance company expenses. C. Mortality expenses. D. Policy reserves. Policy reserves. If the premium on an individual health insurance policy is paid annually, semi-annually, or quarterly, what is the minimum grace period required? A. 10 days. B. 20 days. C. 30 or 31 days. D. None of the above. C. Endow. Maturity date of policy, when it ends. Limit of liability. Also known as the face amount, it is the death benefit payable or coverage provided on a life insurance policy. In order for insurers to help avoid the problem of overinsurance, they include ____ provisions in their policies. A. Maximum limits. B. Coordination of benefits. C. Neither of the above. Coordination of benefits. Joint life annuity. Annuity is payable to two or more named annuitants while all are living. O. Upon death of the first annuitant, the benefit stops. Primary care physician, PCP. Gatekeeper in HMO's PCP will either provide treatment after being the first contact for a person with an undiagnosed health concern, or make the determination to refer the subscriber to a specialist. Family policies. To this base life insurance policy, a term insurance rider is attached that is designed to provide a monthly income to the survivor if the insured dies during the specified term. The insurer can change the premium assuming it is changed for all insureds in a class. However, the company cannot refuse to renew the policy, or cancel it. This is /______ policy. A. Guaranteed renewable. B. Cancelable. C. Optionally renewable. D. Non-cancelable. A. Disability income insurance pays a weekly or monthly income to replace a portion of the one's lost salary due to an inability to work. When a disability income insurance application is submitted, what reason might the underwriting department use to reject it? A. Insurers are willing to only accept applications with extremely small risks exposure. B. Underwriters have to reject a certain number of applications per a certain number of approved applications. C. Disability insurers have to eliminate applications that seem likely to have losses much more frequently or much more severely than what the insurer's rates anticipate. D. None of the above. C. In the insurance business, risk can best be defined as A. Sharing the possibility of a loss. B. Uncertainty regarding the future. C. Uncertainty regarding financial loss. D. Uncertainty regarding when death will occur. C. Assuming CE requirements have been met, how is the life agent's license renewed? Pay the renewal billing notice the department sends out 90 days before the renewal date. Arnold and Bertha are married and work for different firms. Arnold has group health insurance through his company that also insures Bertha. Likewise, Bertha has group health insurance also covering Arnold. Select the correct statement below about how benefits are affected by the coordination of benefits provision in both plans. A. If Bertha files a medical claim, Arnold's company is considered secondary. B. If Arnold files a medical claim, Bertha's company is considered primary. C. First, the secondary insurer will decide what it won't pay, for which will dictate what the primary insurer will pay. D. Since both Arnold and Bertha are covered by a group plan, neither insurer will pay if the other insurer is primary. D. Morbidity tables. Morbidity, the predicted number of claims resulting from illness or injury in any given year for a specific group of insureds. Morbidity tables are used to provide statistics that give the company a basic estimate of how many insureds might be expected to suffer an illness or injury in any year. What is required if an employee joins a group plan after an enrollment period? A. Evidence of insurability. B. Evidence of payment. C. Evidence of conversion. D. Evidence of incontestability. A. Accidental death benefit rider. Life insurance rider affecting the death benefit amount may be called multiple indemnity rider. In the event of a claim, the policy normally pays double or triple the face amount only if the insured's death was a result of an accident. The benefit is payable only if death occurs before a specific age and within 90 days of the accident. Which of the following statements defines partial disability? A. A disabled employee while he is working part-time and receiving lost income under their long-term disability benefit. B. An employee who loses sight in one eye because of an accident on the job. C. An employer contributing half of the disability benefit to an employee out on long-term disability. D. The prorated income an employer pays an injured employee out on short-term disability. A. Principle of indemnity. To indemnify means to restore a person, in whole or in part, to the same physical or financial condition which existed prior to a loss, but without profit or gain. In life and health insurance, it may not be possible to truly indemnify a person for all losses. Instead, indemnity takes the form of cash, a death or disability income benefit, or payments to physicians or hospitals for care and services provided to an insured who is injured or ill. Employees that have group life or health policies covering them are required to be issued A estimate of employer's premiums. B certificate of insurance. C master policy. D monthly premium notification on a non-participating plan. B joint survivorship. Joint survivorship, last to die, is a whole life policy written to cover 2 or more lives, and the death benefit is not paid until the last insured dies. When any change in residence address occurs, every licensee and every applicant for a license must notify the commissioner Select the most correct response. A. Within 6 months after the move has taken place. B. Within 6 months before the license is to expire. C. 30 days before submitting a continuing education certificate. D. Immediately. Immediately. Pure risk versus speculative risk. Pure risks are insurable, but speculative risks are not. Pure risks, a possibility of loss, no loss, or gain. Pure risk, a possibility of loss or no loss, there is no possibility for gain. Sam's insurance policy pays a dividend. The agent that sold Sam the policy refers to the shareholders of the company as participating, therefore it is a n underscore 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 insurer. Mutual. Capitation. How HMO primary care physicians are paid a fixed monthly fee made for each subscriber enrolled in the doctor's office regardless of the services provided. Preferred risks versus standard risks. Standard risks are individuals who have the same health, habits, sex/gender, and occupational characteristics as those reflected in the mortality table. Preferred risks are individuals who meet certain requirements and qualify for lower premiums because of ideal health, height, and weight. Individuals in this category have a longer than average life expectancy. An annuity which may be used to help fund retirement in a few years maintains a separate account. The owner purchases accumulation units. This is called a annuity. Variable. Fully insured status. Fully insured status requires an individual to have earned 40 quarters or credits, which is approximately 10 years of employment. A fully insured worker has permanent coverage under Social Security and cannot lose this status. Benefits that may be received under fully insured status are retirement income at age 62 or older, spousal retirement at age 62 or older, premium-free Medicare Part A, long-term care. Long-term care, LTC, insurance includes any individual policy, group policy, or rider that is advertised, marketed, offered, solicited, or designed to provide coverage for no more than 12 consecutive months. Mr. Jones answered questions on his application. What are they called? A. Warranties. B. Responses. C. Representations. D. Perils. C. Admitted insurance company versus non-admitted insurance company. An admitted insurance company is authorized to transact insurance in California because it has a certificate of authority granted by the California Department of Insurance, CDI. A non-admitted insurance company is not authorized to transact insurance in California because of failing to comply with California requirements or did not seek admission. Elimination period. The elimination period may be as short as 30 days and as long as 1 year, with 90 days being the most common. The elimination period is a waiting period after a loss occurs before the benefit period begins. The shorter the elimination period, the higher premium. The license of an agent is considered inactive when a. All renewal fees are paid but there is a termination of all appointments. B. The license has not been renewed. C. Transactions of insurance are no longer executed following a 1-year period. D. A. Carl's policy lapsed. Which of the following would reinstate his policy? A. Carl's insurance company accepted his late payment. B. Carl sent a written notice regarding his late payment. C. Carl was issued a reinstatement application. D. Carl contacted his agent. A. Incontestability clause. Within the first 2 years of a policy, the insurer may contest a claim and void the contract upon proof of a material misstatement or fraud. Contributory plan. A type of group insurance plan where employees pay 100% of premium payments and at least 75% of employees participate in this policy. In the California Insurance Code there is a definition that reads, in short, a person who, for a fee, offers to advise any insured having any interest in life or disability insurance contracts. This is the definition of a. An insurance broker paid on a fee-for-service. B. A solicitor. C. A life and disability analyst. C. An agent mostly sells long-term care insurance to individuals. He obtained his insurance license, Life and Health, in January of 1998. In 1998 he must a. Complete 25 hours of life and health continuing education only. B. Complete 25 hours of life and health continuing education and, in addition, complete 8 hours of LTC-specific continuing education, a total of 33 hours. C. Complete 25 hours of life and health continuing education, 8 of which are LTC-specific. D. None of the above. C. Social Security blackout period. The time between when the youngest child reaches age 16 and the spouse is eligible for retirement benefits at age 60. Per Stirpes. This is a method of distribution that will pay to surviving beneficiaries equally if named a beneficiary dies before the insured does. Cease and desist order. Given when unlicensed persons are caught transacting insurance without appropriate licensing, and penalties can be up to $5,000 a day. Jim pays his premium monthly. What is his grace period? A. 7 days. B. 30 days. C. 31 days. D. 10 days. D. Which of the following is false about dividends paid from life insurance policies? A dividend is a. Treated as a return of excess premium paid by the owner and is therefore taxable. B. Interest earned on dividends and paid to the policy owner. It is considered taxable. C. Not guaranteed to be paid to the policy owner. A. Aleatory contract. The exchange of value is unequal. Insured's premium payment is less than the potential benefit to be received in the event of a loss. Uniform Simultaneous Death Act provides that when the insured and primary beneficiary die as the result of the same event and the order of death cannot be determined, it is assumed the insured died last, protecting their secondary beneficiary or heirs. For elements of a valid contract. 1. Competent parties. 2. Legal purpose. 3. Agreement, offer and acceptance. 4. Consideration. Immediate versus deferred annuity. Immediate annuity, annuity that does not have an accumulation period and is used to generate immediate income within a year of the issue date. Deferred annuity, annuity that will pay periodic benefits starting at some specified time in the future, begins more than 1 year from the issue date. Deferred annuities are ideal for accumulating a retirement fund. All of the following are true regarding a policy owner that ceases making premium payments on a 10-pay life policy and selects the extended term insurance option, except A. The face amount will be the same on the new extended term plan as the old 10-pay life policy. B. Premium payments no longer have to be made. C. The extended term policy will be in force a certain period and then expire. D. The extended term policy will reflect the same cash value as the original policy. D. In life insurance policies, naming beneficiaries is an important part of the application process. Choose from below the best description of a contingent beneficiary. A. One with the first right to receive proceeds if there is no surviving primary beneficiary and the insured dies. B. One with the right to proceeds only if the primary and secondary beneficiary die in a common disaster. C. One with the right to proceeds if the insured dies. D. All the above are false. A. Tom buys his wife Mary a $50,000 diamond ring. When she is not wearing the ring, she keeps it in a safe deposit box at a local bank. This is an example of risk A. Avoidance. B. Reduction. C. Retention. D. Transference. B. Human life value approach versus needs analysis approach. Human life value approach is a measure of the projected future earnings and services of a person at risk in the event of a premature death. The objective is to provide the proper amount of coverage as determined by the value of the individual to his/her dependents using the following factors: the individual's age and gender, the individual's occupation, annual wage, and planned retirement age. Inflation needs analysis approach determines a need for coverage upon the premature death of an individual. It always assumes the death of the individual to be immediate and factors the following steps into arriving at the proper amount of coverage needed. Calculate all financial needs caused by immediate death, including debts, medical bills, and final expenses. Provide lifetime income to the spouse, pay off mortgage or other debts, provide funds for children's education, subtracts any assets available to fund financial needs after death, such as retirement plan, other insurance, liquid investments, separate savings, life income joint and survivor. Joint annuity with lifetime income and is payable to two annuitants, in one check, while both are living. Upon the death of the first annuitant, survivor benefits continue, either paying the full amount of reduced to 2/3 or 1/2 for the survivor's income until the survivor dies. Contract of adhesion. One party writes the contract without an out from the other party on a take it or leave it basis. Hospice care. Provides pain control, comfort, and counseling for the terminally ill patient. Hospice care also includes a family counseling benefit. Unilateral contract. Only one party is legally bound to the contractual obligations after the premium is paid to the insurer. Only the insurer makes a promise of future performance, and only the insurer can be charged with breach of contract. According to the terms of the suicide clause found in a life insurance policy, if an insured commits suicide 6 months after the policy is issued, what will the insurer do? Refund all the premiums paid. Which of the following supports the Medical Information Bureau? A. Insurance companies. B. The Department of Insurance. C. Insurance agents. D. None of the above. A. What regard to the tax treatment of the death benefit in life insurance is true? Death benefits are exempt from taxation. A supplemental insurance policy that pays a set amount for each day that an individual is hospitalized is known as A. Long-term care supplement. B. Temporary major medical. C. Hospital confinement indemnity. D. Hospital surgical expense. C. Which of the following is a type of single deductible for all family members that, when satisfied, overrides any remaining family member's individual deductibles? A. A calendar year deductible. B. A per-cause deductible. C. A copayment. D. Family deductible. D. Medi-Cal. Medi-Cal is the name of the Medicaid program in California that provides health coverage to people with low income and asset levels who meet eligibility requirements. For individuals age 19 through 64 and not confined to an institutional setting, Medi-Cal eligibility is conditioned only on a household's annual income. Benefits. Medi-Cal pays for medically necessary health care including physician visits, hospital and nursing home care, home health care, laboratory and X-ray services, prescriptions, medical equipment, ambulance services, eyeglasses, prenatal care, preventive care, and hospice. Partial surrender. A partial withdrawal is considered a partial surrender of a universal or variable universal life policy. The partial surrender is actually paid from the policy value and reduces both the amount of the death benefit and the amount of cash value in the policy. Irrevocable beneficiary. An irrevocable beneficiary has certain guaranteed rights to assets held in the policy, and this beneficiary must agree to any changes in rights to compensation from policy owner. A disability policy is issued and premiums are paid on an annual basis on the 1st of January. At the first anniversary, the insured decides they do not want to renew the policy and they do not pay the premium. On the 8th day after the premium due date, the insured submits a claim for medical expenses. How will the company respond to the claim? A. It will not be paid because the policy expired on the anniversary date. B. It will be paid because the insured did not request a formal cancellation. C. It will be paid because the loss was not reported within the grace period. D. It will be paid because the loss occurred within the grace period. D. Biatical settlement. An agreement between a policy owner and a third-party buyer to purchase the life policy covering a person who is diagnosed as terminally ill with less than 24 months remaining life expectancy.